Welcome back. Joining us to put the day's markets action into perspective is independent analyst Nkosilathi Dube. Nkosilathi, thanks so much for joining us today. Now, equity markets really having a good week and on track to wrap up the week on a positive note. This, of course, on the back of that upbeat data out of the US, just reaffirming that the economy is still strong and upbeat, and also raising bets for those Fed rate cuts come September. Big change from last week. Do you think this rally is sustainable?
Thank you very much for having me. Yes, we've seen quite a significant rally. It's a classic case of investors buying the dip lately. We've seen the JSE Top 40 grow about 3% this week, so headed for its fourth consecutive day of gains. But the appetite for equities is the same across the board globally. We've seen the US S&P 500 grow just over 3%. It's the same in Europe and also in Asia. There is potential that this rally could be sustained. I think recessionary fears had initially driven the stock markets down, but that recessionary fear has essentially dissipated given the recent data that has come out. The US has reported, stability in its labor market with slightly lower jobless claims. But on top of that, it's also reported a fairly good services sector, which is almost at its best since the past year or two. So there is potential that this rally could be sustained, and we'll be looking to see whether there might be some certain stocks that might outperform.
Nkosilathi, I love asking market commentators this question. Do you not think that last week's global sell-off was over-exaggerated, considering how the Fed says it does not focus on one set of data print, but rather looks at everything holistically? So why the panic off the back of one jobs data print?
Yeah, I mean, it could have been over-exaggerated, to be fair. The markets did react to the highest extent, if you saw. The issue with the last week was that there was a carry trade unwinding.
Yes,
So
yes.
essentially, where investors were borrowing in cheap money, supposedly in Japan, where the interest rates were low, and investing where they could earn higher yields. That was the issue because the Bank of Japan raised its interest rates, and as a result, investors decided to unwind some of their trades and basically allow themselves to pay off some of the higher borrowing costs. So it could have been exaggerated to some extent when the rest of the market started to pick up on the main or the larger participants unwinding. But at the same time, it's fair to say that there are, aspects that we should consider holistically rather than just one data point.
That's right. Let's look at another country within that Asian region, China. So that Chinese consumer not looking good, and numbers from e-commerce players Alibaba and JD.com affirming that as second quarter sales from both companies coming softer than expected. On the flip side, though, Chinese retail sales data jumping to 2.7% in July. Taking the retail sales into account, would you say that the state of the Chinese consumer is improving, and that what we saw was maybe the bottom of the struggles on that front?
Yes, it could be potentially improving, but I think that consumers are still cautious. The Chinese economy hasn't rebounded as expected post-COVID, and so both businesses and consumers are pretty much playing it safe, to be fair. Would this be a bottom? Well, it's fair to say that we need to see some more data points to make that conclusion. But given that the Chinese economy is actively applying certain stimulus to, contribute to the economy rebounding, it might be a case that it could have been a bottom. But yet again, we have to see what's further economic indicators that are yet to come.
Sticking with China and earnings out on that front, Tencent out with strong numbers, profits up over 80% in the second quarter. That gaming industry really recovering after China sort of lifted those restrictions earlier this year. Have we seen that kind of translate into Prosus and Naspers' share price?
Yes, certainly. Naspers does hold quite a decent amount of shares in Tencent. So if Tencent is, rebounding or growing, then there is potential that Naspers can gain on that. But given that, the Chinese government did remove some of the restrictions from the gaming industry, and being that the gaming industry it has quite a high concentration of Asian players in it, this could be a good sign that there might be more upside to come, and there might be more to come from Tencent itself. So it's one stock that I'm definitely going to keep an eye on, and yeah, we'll see whether that growth can be sustained into the future.
Nkosilathi, before I get your stock pick, we're just talking about things on the upside, everything on the upward trajectory. The Rand really powering through. The last time I checked, it was sitting at about 17.90. Is this off the back of, the positive data we've been seeing, the overall general positive sentiment we've been seeing in markets?
Yes, certainly. There's been quite a lot of risk appetite in the markets. That's driven most of the risk assets higher. And the Rand is one of the gainers also. So definitely because of that confidence that the markets are beginning to receive yet again, following last week's recessionary fears, the Rand has been one of the front runners in this risk asset environment.
All right, let's get your stock pick. What are you hanging your hat on today?
So my stock pick for the day will be DRD Gold. We've seen gold prices trading near all-time highs. I do think that if this is the case for the medium to long term, there is potential that DRD Gold could continue to sustain its top line and even grow it, which could then filter down to the bottom line. And as we know, investors tend to look for businesses that are earning the most to, pour their money into. And I do believe that DRD Gold might be one of those businesses should the gold prices sustain at these high levels.
So DRD Gold, one to look out for. Nkosilathi, thanks so much for joining us and just taking us through the day's markets action. That was independent analyst Nkosilathi Dube.